Hello guys, welcome back to the channel. Appreciate you guys tuning in and listening as always. So, the average car price right now is at $50,000. That's where it's reached. I know that is insane, but this is where we're at, and today I wanted to talk about an article on MoneyWise that talks about this. The article is labeled, "The average car price in America is $50,000, just $9,000 shy of the national annual salary. So, why can't US automakers make cheaper cars?" Now, of course, the viewers of this channel know why, and it's simple. Greed, greed, and more greed. Not costs or regulations or politics or any of this other stuff people like to mention, which may play a part, but are not the main reason. And I will get into why that is shortly. But let's first dive into this article. So this article starts off by mentioning that this amount is $9,000 less than the average annual salary, which is supposed to be shocking but really isn't. The thing is, this does not matter because everything is about credit and payments nowadays. It's about interest rates and it's about monthly payments for most consumers. And this is why housing prices are out of control, despite the fact that incomes are not going up by that much. Consumers are becoming more and more detached from the actual cost of things and are just more focused on whether or not they can afford to make the loan payments. It's sad, but that's the unfortunate reality today when it comes to the car and housing markets. And then this article goes on to say that affordable cars have all but vanished. Thank you, Captain Obvious. I wonder if that $50,000 average price might have been a hint. You can't have an average price that high and still have $20,000 cars in the market. The whole system is predicated on pushing customers who normally buy $20,000 or $25,000 cars to buy $30,000 or $35,000 ones instead, and kicking those who can't afford that to the curb. So that's how it got to that insane amount. Now, this article then goes on to mention that used car prices are falling, and it's about $20,000 right now. But that, in my opinion, is misleading. You see, that $20,000 price tag doesn't take into consideration the very low quality and the low amount of options that are in the used car market today. And when you take that into consideration, that $20,000 price tag is an overpayment. People that have decent used cars are not selling them. And if they do, it's either friends or family in a private sale. The few that do sell them outside of that are selling them at a massive premium. And so comparing the used car market to the new one is nonsensical. As bad as the new car market is in terms of price and quality, it's nothing compared to what the used car market has become. They also mention high used car interest loans, and yes, that has squeezed out a lot of borrowers on the lower rung of the economic ladder. So not only have a lot of more quality focused consumers been driven out, a lot of the struggling ones have too. So you just don't have as big a consumer base to charge higher prices like you do in the new market. The article then starts to talk about why affordable cars are disappearing, and they talk about how automakers are essentially going for margin over volume and that they're focused more on SUVs and trucks. They could have just summarized it all by just saying greed. Now, I want to make this clear. I don't consider profit seeking in and of itself to be the greed I'm talking about. Profit seeking is a part of capitalism, which I'm all for. The greed I'm referring to is when automakers seek short-term profits to the detriment of their long-term business health. Think about Stellantis. They're struggling massively right now, and who knows, they might even go bankrupt. In the past couple of years, they squeezed out whatever they can from their auto workers, customers, and dealers to maximize the profits during that span. Now, a lot of their former customers are broke with tons of negative equity. New customers can't afford their cars. The quality of a lot of their cars are abysmal thanks to the cost cutting. They led in recalls last year, and their dealers are struggling with tons and tons of unsold inventory. So this to me is just greed. When your profit seeking is so short-sighted that you ruin your relationship with customers and dealers just to get higher share prices and better quarterly earnings in the short run. This is the reason we can't get cheaper cars. Not profits or costs or regulations, but simple short-sighted greed. Cheaper cars, I would argue at least, are more profitable in the long run. However, a lot of these companies are not concerned with the long run. That doesn't always translate to share prices or short-term earnings. It's about a business model that suits their short-term share prices and maximizes whatever bonus their CEO can get. And the auto industry, unfortunately, is rampant with this mindset. So this is the greed I'm talking about, not normal profit-seeking type of greed. It's the short-term price gouging type of greed that benefits no one in the long run. This is what we could all do without. Now, this article then goes on to mention EVs and talks about their average price of $55,000. Electric vehicles are an interesting topic, and I do plan to make a video on them, but here's the scope. They're not driven by politics or a green agenda. They are driven by the greed agenda. greed as in Greed. If that was not the case, EVs would be more affordable. But their insane prices are an indication that automakers are looking for a new cash cow, not an environmentally friendly alternative to ICE engines. And I know this is obvious, but automakers don't give a damn about the environment. This BS notion that auto manufacturers and CEOs have this profound concern for the earth is ludicrous, quite frankly. So I don't buy any of that for 1 second. The article then goes on to talk about the average loan term, which is about 68 months, and the average loan rate, which is 6%. So customers are paying more monthly and for longer periods of time. And by the way, a lot of YouTubers focus on the out-the-door price, but you should think of the total price you pay with interest. The average person pays about $9,000 over the course of 68 months for your average vehicle today when we're talking about the loan, meaning that the cost of the car is closer to $60,000 when it's all said and done. $60,000 for a car. That's just insane. Now, to continue on with this article, it goes on to talk about the fact that cars under $35,000 have fallen by 80%, which is no surprise, but interestingly, $60,000 cars have gone up by 163%. Now, that's cars that are $60,000 or over. That's ridiculous. This is a byproduct of the auto industry seeing the customer as the asset, as the product. They're not selling cars, they're selling loans to banks, and they need to make these loans as lucrative as possible for these banks. So, automakers are not really selling cars to auto dealers, they're selling what I see as debt traps. And these dealers then use these debt traps to capture these customers in these loans and then sell the loan to the bank. This is what the auto industry has become. And customers, sadly, are payment shoppers who fall right into this kind of trap. So in this greed-driven environment, cars are no longer the product. Consumers paying high-interest payments for overpriced cars are the product. The article then, in the end, talks about the struggle to build budget cars, which quite frankly is nonsense. Because they're talking about it as if it's hard to build them or there's all these concerns with regulations. No, there isn't. The industry has no desire to build budget cars, and that's the issue. The desire is to build cars that they can make huge profit margins on. So when you look at the industry right now based off of last year, they sold 16 million cars with an average price of $48,000. They would much rather try to increase the margin on those 16 million cars rather than sell more cars, even if the latter means more profits in the long run. So the auto industry has no desire to reintroduce budget or cheap cars. If the cost production of cars dropped to like 50% of what it is right now, automakers would just see that as an opportunity to make more profit per car, not as a chance to sell more cars at a cheaper price. That's just how they operate nowadays. But anyways, that's the gist of this article. Another reminder of the direction the auto market is going in, but it is what it is. That's the situation we are in. Let me know what you guys think of this in the comment section below, and as always, if you enjoyed this video, please click like and subscribe, and I'll see you in the next one.